Howdy folks. This is going to be the new Monday market recap over this trade that I took today on SPY. Today's trade actually did make some profits, which was really good, so let's run you guys through it. From the last video, if you guys had tuned into that, the one major thing that I wanted to mark out was this daily low right here, and I can show you why I wanted to mark out the daily low. That was because of this big rush up that we had overnight. Well, see, no one could have predicted this big rush up overnight, but when we look at a gap similar to this, we can look for gaps like this to automatically be filled. This gap, no orders have been in here, no price action has been here, a new week just opened, so we had this crazy big gap right here. So obviously price overnight during a session, what do you want to do? It wanted to come out, it wanted to fully fill out this gap. Now, as we can see, we even had the highest point of this when our candle reached all the way up here, right? But let's get into the trade that we had today. So for today's trade, we're running into the trade, and for this one, I mainly use a 30-minute, 15-minute time frame. So let's go in and let's mark out what we did. So today's trade, I actually took a bunch of long positions. I made a trade long, and this is what I did. So first thing that I wanted to mark out is I wanted to mark out high draws on liquidity. So a high draw on liquidity that we had was this draw on liquidity right there, and then we had as well as more draws on liquidity stacked up right there. And then we hop into the 5-minute time frame. The 5-minute time frame is where I took my trade. So moving into the 5-minute time frame, what we had at the beginning was, pre-market opens, and then since we know new money's coming into the market, nothing too crazy, nothing too bad, we actually have this fair value gap right here on the 5-minute time frame. And kind of what I was looking for in here, I was looking for a fill of this fair value gap and a move out. But with this fair value gap, we actually broke structure right there. We did not break structure right there. That's a very important detail that I'll get into. Let me change these colors for you guys so you know what is my take profits actually during this trade. So look, oh, sorry, I forgot to mark out this 5-minute draw on liquidity right there. So where did we go? So pre-market comes in, pre-market has a fill of this fair value gap, but we don't have leg, we don't have moves out of it, so we really can't target anything. And because of new money flooding into the market, this doesn't mean that, okay, now that we inverse this, we have to change our daily bias, because our daily bias could have been bearish. Like, we could have changed it to bearish, but at the same time, we want to remember that the only bearish areas we have are bearish areas like that. This is the only major draw on liquidity, 641. So we can kind of assume that new money coming into the market, price really doesn't want to come down, and price really doesn't want to fill in 641. It doesn't want to take out this entire gap. As well as if we check the history of SPY, SPY is relatively in this zone always. So we wouldn't want to come in, we wouldn't want to touch this like at all. So these could be only draws on liquidity, right? But then we got to look at our confirmation confluence. If we wanted to target lows, what would we have to do? We would have to wait for an equilibrium fill. So if we hop into like maybe 5-minute time frame and we draw an equilibrium from that low to that low, it's getting filled, but no point in time do we see a fill and we see a reverse out of it. We don't see any of that. So let's get back into our trade. So during our trade, we had this inverse of price action. So I was like, okay, maybe we had to change, maybe we don't have to change. We got to break a structure right here. Break a structure is one of the confluences that we use when we're trying to figure out, okay, is price going to continue that trend? Price is now changing trend, and we took out a draw on liquidity. But as we know, draw on liquidities are areas for price to reverse. So what do we have? It actually caused a fair value gap. Now this fair value gap to me was the most important fair value gap of the day. The only reason for that is because if we came in and we filled this fair value gap, we would look for legs down. So we're coming in, even though we are coming in, and we're filling this fair value gap frequently. I can show you guys on 1-minute time frame. So on 1-minute time frame, we're getting fills of the fair value gap, but we're getting no 5-minute moves down, because that's kind of what we got to look for in this. Even if 1 minute shows strong signals that, okay, we're going to start moving down, we got to obviously look for 5-minute just because it's a 5-minute fair value gap. So what do? We come in, we actually inverse this on the 5-minute. So we're good. Now we're good. You know why? Because we came in, we swept liquidity off this 5-minute low. We have an inversion of a fair value gap. Inversion of fair value gaps are really strong when it comes to me. I like to trade inversion of fair value gaps. Now this is my second. So we have one confirmation confluence. Well, sorry. One confluence to change trend liquidity sweep. One confirmation confluence inversion of fair value gap. And then we can also wait for another one. If we draw from this green to this red, that's a high right there. So what do we have? We have break a structure on a recent high. That's another one. And now for the final one. For the final one, we had an equilibrium filled. Equilibrium fill right there. It's probably hard for you guys to see it, but it's that green line right there. So what do you do? We came all the way up to this high. So then right there, we fill it in on the 1 minute time frame. And then on the 1 minute time frame, we're looking for a fill of this equilibrium right here. And once that equilibrium gets filled, we hop down to the 1 minute time frame. This is where we take our entries, 1 minute time frame entries. What do? We're starting to rush up. We get the fills of the fair value gaps. We even get a lot of 1 minute breaking structures, 1 minute equilibriums too. Super good, super nice. But then let's hop back on 5 minute and let's show you guys my entry. So my entry took place right as this candle closed. Right here. That candle closure right there. So the draws on liquidity that I was looking to target, I was looking to target draws on liquidity all the way up here. My personal self, wanted to target 664 just because that's a major draw on liquidity. That's a high draw on liquidity. But I'll show you guys why I got out of this trade early. Stop loss. We move stop loss to the bottom of this low. That's a pretty good risk to reward ratio, if I do say so myself. But this is why I can break you through my trade and break you through what happened. Boom. So when we came into the trade right here, we obviously know that on draws on liquidity like this one right here, and I'll circle it for you guys so you can see it actually in depth fully right there, right? Draws on liquidity like that, they're 5 minute highs, which are something not all traders should be scared of, but they are an area for price to rebound and inverse. So even when we came in right here, we didn't have no candle closure out of it. What did we have? We created a fair value gap, right? We created a fair value gap. Just because we closed, I'll make this purple so you guys can see it better. So just because we closed into this fair value gap doesn't mean that it's automatically inverse, doesn't mean that it's automatically invalidated. You know, this fair value gap could have well been a point for price to fill, price to move out, price to close up, for us to move potentially higher. But if we look, we do get an inversion of this. And for me, I know inversion of fair value gaps are pretty strong when it comes to that type of stuff. So over here is where I actually bought out of my trade. So we did make small $5 to, not $5. We made around like $10-15 profit off this trade. Nothing too crazy, nothing too bad. I'm still happy that we did a green day today. We did come off on a green day today. But going back into the trade, we could have eventually lost it if we re-entered. But we are still up on the week. Hopefully that Tuesday, Wednesday, Thursday, Friday, we can have a lot more better days. I know on Forex Factory that we check news that we'll have some red flags going into tomorrow's trade. But yeah, that was a trade that I took today on SPY. One thing that I want you guys to take away from this is actually patience. And the reason why I say patience is because I want to mark out, before I end this video, I want to mark out basically this. You know, I want to mark out what this means to most traders. This doesn't mean we're changing trend at all, right? This whole downward spike right here, I can even circle it for you guys so you see it better. Like that whole downward spike right there, that's not like us trying to change price. And the reason for that is market open, it's a new day. We can now have new money flooded into the market. We would look for a change of trend if we close below here. Below there actually is a 15-minute low. Now that 15-minute low would have been strong. If we came down to there and we had confirmations down there, then we'd look to target mainly bearish. But the reason why we don't target bearish is just because of this big overnight candle. But like I was saying, patience is the key thing. When we get into our confirmation confluences that shows us bearish, and when we get into confirmation confluences that shows us bullish, we can take trades based on that. We don't want to take trades based off gut and emotion. So we obviously come down, we come back up. And I know what most of you guys might be thinking. You're like, Josh, you know, why didn't you buy in right here? You know, you would have had better profits. Well, the reason for that is we didn't have a confirmation confluence. I obviously knew after every inversion of a fair value gap, we always have to have a form of retracement that the fair value gap, that the inversion is confirmed. We want price to come down, we want price to fill orders, and we want that inversion of price to be confirmed by a retracement. What do we have? We have an equilibrium retracement. we're able to buy in at such a good time. None of our stop losses got hit. Even if we brought the stop loss all the way up to here, it wouldn't have gotten hit, right? We made good profits today. So going into the trade, I think for tomorrow's trade, I'm going to increase my take profit a little bit lower. I feel like I should increase my take profit to here. That we have a little bit of a better risk to reward ratio. But at the same time, it's not always bad that we don't hit full take profit. Even if we hit minor take profit, this would have been a minor take profit, right? So that's the trade for Monday. I hope you guys enjoyed the video. Keep in mind that one thing that I want you guys to take away from this is patience and that new money coming into the market. And that doesn't mean that we had to change our bias. We only change our bias if we get the confirmation confluences that our bias is getting invalidated and that we're actually shooting price in the opposite direction. Thank you guys for watching the video. Hope you guys enjoyed and learned something. See you in the next one.